Oh, that's not good. FTX has gone insolvent. They no longer have enough money to facilitate customer withdrawals. And I know what you're thinking. Hey, they deposited money. What happened to that money? And that's because FTX used that money to fund other investments and pretty much they gambled it away in the sum of billions of dollars. Now FTX is trying to raise money, otherwise they are gonna go bankrupt. And if FTX goes bankrupt, you might not see your funds for many years or at all. The same thing happened with Mt. Gox. It has gone into bankruptcy, and customers who had Bitcoin on Mt. Gox a decade later still don't have their funds. And if you've been looking at the crypto markets, everything has been crashing as a result of this FTX disaster. And I really want to talk about how crypto exchanges make their money because it's super easy. All they have to do is facilitate trading and they take a fee. If you're wondering why there are a lot of different crypto exchanges, it's because it's a very easy business model. The hardest thing to do is get customers. FTX earned over $1 billion in 21 just through trading. Basically, when you use a crypto exchange and you make a trade, there's a trading fee. The trading fee goes to the crypto exchange, and maybe part of that goes to any kind of incentive program like affiliates or some kind of buyback and burn system. Now, when it comes to a centralized crypto exchange like FTX, Binance, Coinbase, we got to talk about what happens to your money when you deposit your funds. When you deposit your funds to a centralized crypto exchange, you see a deposit address. That deposit address is associated with your account. You send your crypto there, and then you can start trading. Now, once your crypto is on that exchange, it's very dangerous for that exchange to just leave that crypto available. So they're going to move it to a cold wallet. So there are hot wallets and cold wallets. Typically, they'll hold 98% of their funds or something around that in a cold wallet to avoid any type of risk in the event of a hack. And crypto exchange hacks have happened. So it is a very common practice to use hot and cold wallets. They're just not going to leave everything online because it puts your funds at risk. And with this big FTX scare, all the CEOs of other crypto exchanges are coming out and saying, hey, we are not using your funds inappropriately. They are available and you can withdraw them at any time, which is the way it should be. And with the collapse of FTX, there's a very good reason why you should not use customer funds inappropriately. Now, what can we expect for the future of crypto? Well, it's not looking good. I personally did not think the crypto prices would fall this badly. Support and technical analysis apparently mean nothing anymore. Everything has been going down, and that has been for a full year now. I have lost a lot of confidence in the space, and I'm sure I'm not the only one, but we also have to consider what FTX was in the middle of. FTX was making a lot of political donations. They were getting involved with a lot of celebrities. They got the naming rights to a sports stadium, and now they have collapsed. And since they were one of the largest crypto exchanges out there, it doesn't give a lot of people confidence, and potentially we could see some very strict regulation in the future. This could make the adoption of crypto and blockchain technology more difficult over the next few years. Now, people could turn to decentralized exchanges as well, but we need new users to sign up and be comfortable with the process. A decentralized exchange is a very complicated and very risky if you are a new user. You might not be familiar with how things work, and you can easily get scammed. That's why centralized exchanges play a key role in bringing on new users to learn about the crypto space so they can use crypto in a safe ecosystem before getting into the dangerous free world of blockchain and decentralized finance. And if you've been in the crypto space for a while, especially the last year, you do know that the DeFi space is a problem because there are a lot of scams out there and a lot of things that look legitimate or things that are legitimate and turn out to be a scam or rug pull. So in my opinion, I don't think we're going to see another bull run for at least a year. I think we might see some crypto adoption on a very basic level with NFTs, with Reddit. That's something amazing that I've been following. Starbucks is launching their loyalty program with NFTs. Meta has integrated NFTs with Instagram. I don't think anyone's using it, but all of this is still in its early stages. Now, I am long-term bullish on crypto and blockchain technology, but it's going to take a while for the public to gain trust in crypto again. And I'm hoping FTX doesn't go bankrupt and somehow they get the funds to continue business so customers can get their money back. But even if FTX does get that money and customers can withdraw their funds, those customers have lost all their trust in FTX and they're going to go somewhere else. And whenever we do see a massive crypto crash like this, a lot of projects don't recover. The projects that do make it through a bear market are going to have a solid use case, they're going to have a business model, they're going to be generating revenue, where it doesn't really matter too much what other projects are doing. They're building, they're generating revenue, and they're continuing to grow. So with that, let me know what you think in the comments. Follow me on Twitter, join the Discord community, and hang in there.